The tech sector hitting another record high today, gaining nearly 35% so far this year. Our next guest still sees further upside from here. He is, though, looking beyond the mega cap leadership. Joining me here at Post 9 is Sung Cho. He is Goldman Sachs Asset Management co-head of public tech investing. It's nice to see you. Welcome.
Thanks very much for having me.
Okay, so where are the best places to look outside of the mega caps, which, you know, no one wants to talk about? Everybody's so fixated on these big names. Apple's going for 7 in a row. Nvidia's off to the races. So what do you think?
So look, one of the principles of tech investing is to follow earnings estimate revisions, right? And where we've seen the biggest earnings estimate revisions have been in the Max 7. And as a result, those stocks have outperformed. Nvidia went from generating $26 billion in 2022 to generating $26 billion in the most recent quarter. So that's where you've seen the most positive revisions, right? So as you think about whether you want to stay in the Max 7 or you want to look outside the Max 7, you have to look the next couple of years and say, where are the biggest positive revisions? And we think that the revisions around Max 7 have not plateaued, but are going to be less exciting than some of the other areas that we're seeing.
Okay, I hear that from other people as well. I don't think many would be surprised by that, right? You can't keep up this torrid pace of earnings, you know, explosiveness forever. Let's focus on the chips, okay? Because, you know, Nvidia had this correction, and a lot of names within the semiconductor index did as well, and it seemed to be short-lived. Right? The stocks today, I think, is back at a new high. What does that tell us about those other stocks that can work?
Look, I think we've seen so far that NVIDIA's dominated the space. They've had 100% of AI processing market share. But we think that that dynamic is about to change. You know, all the cloud hyperscaler companies are investing in their own silicon capabilities on a platform of what's called ASICs. And we think companies like Marvell are actually set to potentially double their revenues from here. And that's just getting started.
I hear names like Lam, right? Lam Research, Applied Materials. These chip equipment names. That's kind of the wheelhouse you're talking about?
Yeah, no, it's much more. Marvell is much more of an ASIC provider. So as, you know, companies develop their own silicon, like Amazon's developing their own silicon, Google's developing their own silicon, they're developing ASIC chip, which is a different kind of silicon relative to GPUs. And we think that's going to start to take a little bit more share relative to the GPUs.
So what about software, which kind of, you know, a lot of the names in that space, certainly the popular ones, kind of fell by the wayside for a while. I had some suggest, no, it's too early to buy the dip. Brad Gerstner, though, who you may know from Altimeter, was on our program from out in San Francisco not that long ago and said, I think we're close to a bottom. Some of those names have rebounded since then. What do we think? We
really like the infrastructure software companies. And so, you know, if you think about what's happened so far in terms of AI processing, all the data that's been trained is largely publicly available data. And we're going to continue to train a lot of publicly available data, but at some point we're going to start running out of the publicly data that's available to be trained. And so the gold mine and the next generation of this kind of AI wave is going to be enterprise data. And enterprise data is still in its infancy, and companies like Elastic are really going to benefit from the migration of enterprise data into AI-type workloads.
Okay, ESTC. What's the market cap of that company? Do you know off the top of your head?
Not off the top of my head. I think it's a mid-cap stock, so it's in the...
Oh, it's 11 billion. So
it's about $10 billion.
So it's not small cap, it's mid-cap, but you think it has a lot of upside from here. And you're a big believer in the power play, the pun intended, I suppose, for AI.
Look, I think in some ways the joke is out, right? It's like the reshoring is happening. The manufacturing renaissance is happening in the United States. We started with semiconductor manufacturing moving over. We have EV factories moving over. Now we're building AI factories in the United States, right? And so we're just building a lot of industrial capacity. And what's putting pressure on is a lot of the power infrastructure. So we're going from 0% power growth to potentially 5% power growth. We need to be able to supply a lot of more power infrastructure. And one of the key suppliers in order to build out grids, in order to build out these power capabilities, is a company called GE Vernova, which does industrial gas turbines and electrical components for, you know, and it's a spin out of GE.